Hey traders, it's John Fortune here for this week's weekly Forex Forecast. I hope you're having a great weekend. Let's start off with the DXY as we always do. Last week in the DXY, I highlighted the fact that we were still in an uptrend and we'd pulled back to the key area of support. And this is an area, the line in the sand, where we can expect to see a rally in the DXY. And if we start to trade below here, where I would not be interested in taking bullish reversals below this level. I did suggest last week that the preferable setup I wanted to see, and I did want to see, was the dollar breaking down. And this is because the dollar is, you can see, starting to run out of steam. So although it's bullish, we do actually have the DXY struggling to make new highs and to break with momentum above the previous highs. And at the same time, because of this, although we had a rally last week, we failed to even break the previous high, which sets up this developing head and shoulders pattern. It is not yet a head and shoulders pattern. That would be confirmed below this level. So unless we come down and break this level and confirm this head and shoulders, I am still bullish on the DXY. However, it's just worth noting that although the DXY is bullish, it is kind of weak. So it's not as strong as it has been recently. So going into this week, once again, any pullback in this market will be viewed as an opportunity to look for bullish reversals once again. And I'm going to be looking up towards the next key of resistance, the upside and the target highlighted from last week at the 92.91. This does mean that I go into next week with a bullish bias on the dollar. It's a kind of weak bias, but I do still favor, unless or until we get that reversal in the DXY lower, I do still favor dollar strength positions going into next week. Next is euro dollar. Now, inversely to the US dollar index, we bounced from the key area of resistance highlighted in last week's video at the 1.1870. This was the line in the sand where you can look for short positions from this area. However, if we start to break above it, especially with momentum, then any short positions would be off the table. We did reverse lower as we bounced higher in the DXY, and going into this week, I still only favor short positions in euro dollar unless or until we can get a break higher and also that head and shoulders reversal in the DXY. And primarily that head and shoulders reversal in the DXY. So any pullback in euro dollar next week will simply be viewed as another opportunity to look for short positions down towards the next key of support to the downside, the target set at 1.1704. You notice a number of these markets, because of that inside week in the DXY, they didn't really move too much last week. So I think we could be seeing some movement in these markets this week. Next is Aussie dollar. Now, last week I highlighted the fact that because the DXY hadn't actually reversed, even though my preference was for it to reverse so we could get potentially a much bigger sell-off than that rally, that kind of short rally which didn't even make new highs last week, I did note that unless the DXY reverses, I would still be bullish on the DXY pairs, and Aussie dollar was one of the markets highlighted for that last week until or unless the DXY reverses, as well as New Zealand dollar, and we also looked at euro dollar, which declined. We did come down and take out the target last week at the 0.7401, so a really nice move in Aussie dollar last week. Going into this week, the same thought process applies. Since we haven't reversed in the DXY and it is still grinding to the upside, I do favor once again short positions in Aussie dollar. So any pullback, and we are starting to break with a bit of momentum, any pullback this week is simply going to be viewed as another opportunity to look for bearish reversals in this market down to the next key of support to the downside and the target set, the 0.7340. Next is New Zealand dollar. Now, outside of euro dollar and Aussie dollar, especially Aussie dollar, which is probably my favorite dollar short going into next week, I do like New Zealand dollar to the downside still. We didn't really have much of a move to the upside in the DXY last week, and we had, conversely to that, a rally to the upside in a lot of the New Zealand pairs off of the back of remarks and the interest rate decision last week out of New Zealand. I just see this after refreshing the process this week, and the data just shows me that this is more likely to be something we can fade to the downside than the start of a bigger move to the upside, especially with the DXY still grinding higher. So we've already pulled back. Any continued pullback is simply going to be viewed as an opportunity to look for bearish reversals. We didn't really go anywhere last week. So any bearish reversals in this market will be viewed as an opportunity to look for short positions down towards the next key of support to the downside and the target set, the 0.6842. Next is US dollar Swiss franc. Now, this is the chart I wanted to show you guys because it looks like we are stuck in a range. We're kind of moving sideways in this market, and it looks like we're forming an inverse head and shoulders, potentially at the bottom of this range in US dollar Swiss franc. So any pullback would be viewed as an opportunity to look for bullish reversals into the next key of resistance, which is more or less the top of the range here, at the 0.9080. Now, there's two key takeaways from this. One, the fact that this market is moving sideways or ranging shows us the US dollar and the Swiss franc are relatively either both strong or both weak. They're closely aligned. It's not that one currency is strong and one is weak, otherwise you'd see the currency pair moving. So both of these pairs are evenly matched in currency strength, and we know the DXY is actually quite strong. Out of all of the dollar pairs, I like the US dollar Swiss franc pair the least, because you're trading the dollar to the upside against another fairly strong currency. I would prefer Euro dollar, Aussie dollar, New Zealand dollar, US dollar CAD. But it also feeds into what we're going to be looking at in a minute, which is the Swiss franc pairs, which I like once again going into next week. So just bear that in mind. I think the other dollar pairs we've looked at are better than US dollar Swiss franc next week. The next two pairs we're going to look at are US dollar yen and pound dollar. Now these markets are structured in the opposite direction to dollar strength, so they're set up for dollar weakness. Now because I prefer dollar strength trades going into next week, I will not trade US dollar yen or pound dollar unless we get that reversal in the DXY. If the DXY comes down and reverses like this, all of the other setups in the dollar pairs will come off the table. And this will be the opportunity to look for US dollar yen and also pound dollar opportunities if we get the reversal in the DXY. If we don't get this head and shoulders reversal in the DXY and the DXY continues to grind higher, US dollar yen and pound dollar will not be traded by me next week. I'll just leave them. So if we get that head and shoulders reversal, any pullback in this area would be viewed as an opportunity to look for bearish reversals down to the next key area of support to the downside at the 109.51. So the first thing to note with pound dollar is it's very choppy. So very similar to US dollar Swiss franc, when you get the choppy markets, they're actually better avoided anyway. You want to see markets with nice momentum, which are going to continue moving higher or lower. So this is not a great market anyway going into next week. It is also structured to the upside. So again, I'm only going to be interested in taking positions in this market if we get that reversal in the DXY. Then I will start to look at US dollar yen and pound dollar. And if that happens, I will be looking for a bullish reversal in this market as long as we stay above the line in the sand here at the 1.37420. I'm going to be looking up towards the next key resistance, the upside and the target set at the 1.3996. Next is crude oil. Now last week I highlighted the fact that this pullback was an opportunity to start to look for bearish reversals, and we had a really nice trendline breakout here last week. Going into this week, I am still looking for further declines. We did in fact confirm a head and shoulders reversal in crude oil. So crude oil has now started a bear market after breaking this low. It can sometimes, you can get these kind of reversals and kind of false breakouts in head and shoulders. However, I am still bearish on crude oil going into next week. Any pullback in this market once again, and potentially look for a pullback towards a 74 handle, would be viewed as an opportunity to start to look for bearish reversals down to the next key of support to the downside and the target set at the 69.75. So because of the weakness coming into crude oil, this is going to have a negative effect on the Canadian dollar, and CAD weakness is certainly something I'll be looking at next week. So starting with US dollar CAD, this market looks quite nice alongside Euro dollar, Aussie dollar and New Zealand dollar. Any pullback in this market, because we're very close to the target, so there's not really any opportunity here, but any pullback in this market next week will be viewed as an opportunity to look for bullish reversals into the next key of resistance, the upside and the target set at the 1.2646. If we take out this target and then start to pull back, or we break through this area like this and then pull back, that will set us up for opportunities up to the second key of resistance at the 1.2747. The next market is CAD franc. This was a market I highlighted last week to look for a pullback and a sell-off into the 0.7254. We did have a sell-off because we had an interest rate decision last week out of Canada, and we had a sell-off towards the 0.7254. We haven't got there just yet, so for anybody not involved from last week, any pullback once again would be viewed as another opportunity to look for bearish reversals in this market down to the next key of support to the downside and the target set, the 0.7254. And if we can break through here, going to be looking down towards target 2 at the 0.7189. And the third CAD weak market that I like next week is CAD yen. This was a market I highlighted last week as well. This pullback, I said last week, was an opportunity to look for bearish reversals. We had a really nice head and shoulders reversal in this market last week before this sell-off. Going into this week, if you were involved from last week, I expect the 86.99 to be taken out. If you're not involved from last week, any pullback before taking out this target will be viewed as an opportunity once again to look for bearish reversals down towards the next key of support to the downside and the target set at the 86.99. If we take out this level first and then reverse, all I'm going to simply do is look down towards the next key of support instead at the 86.58. Next is Aussie Franc. Now, Aussie weakness is another theme I'll be looking at going into next week once again. And this was a market that we had this pullback and I was looking for short opportunities. I did in fact short this market. I still have this open position in Aussie Franc to the downside. We ended up with an inside week, so not too much happened. However, if you weren't already short from last week, any pullback once again is simply viewed as another opportunity to look for bearish reversals in this market, down towards the next key of support to the downside and the target set at the 0.6756. I think Aussie Franc and Aussie Dollar are two of the better markets out there next week. Next is Aussie Yen. Now, we recently bounced in Aussie Yen from one of the targets at the 81.49, which was right here, almost to the pip, and we had a big rally from this level. And I highlighted the fact that this pullback was simply a shorting opportunity, is another opportunity to short this market. We did get a really nice sell-off from last week, heading down to the 80.92. So for anybody not already short in this market, any pullback once again would be needed to start to look for bearish reversals in this market, down to the next key of support to the downside and the target set at the 80.92. Next is New Zealand Franc. Now, New Zealand Franc is a market that I like going into next week. I will be keeping my eye on. I think we're going to come down. I think there's a very good chance we come down lower on New Zealand Franc. I'm certainly going to be keeping an eye on this next week. We had a rally to the upside off of the interest rate decision rhetoric. However, I don't see any reason, looking at the data, refreshing the process, that this rally should continue. I think this is going to peter out, and this is something actually I'm looking to fade. So as we've already had the correction, any bearish reversal in this market would be viewed as an opportunity to look for short positions, down to the next key of support to the downside of the target set at the 0.6306. And the final Forex market I like before moving on to the stock indices, the metals and Bitcoin is New Zealand Yen. It has this risk off theme attached to it, where we're seeing commodity currency selling off as we see the safe haven assets of the dollar, the Swiss franc and the Japanese yen rising somewhat. And just like New Zealand's Swiss franc, this rally off of the back of the rhetoric last week, I don't see it really as having any legs. So any continued correction in this market is simply going to be viewed as a fading opportunity. I'm going to be looking for bearish reversals down to the next key of support to the downside and the target set at 75.63. Next is the SPX. In previous videos, I highlighted the fact I was looking for a breakout, a pullback to this level, and a rally into the target, which we took out. This was a really nice move recently in the SPX. Since we took that out, we've rallied a little bit higher, and last week we had a sell-off in the SPX as we saw volatility increasing. I don't see this as a reversal just yet. This is simply an opportunity to look for bullish reversals on a lower time frame. Any continued pullback towards the 431305 is simply viewed as an opportunity to look for further advances into the next key of resistance, the upside and the target set at the 4430.58. The Nasdaq, we're currently structured above the 14579.41, which is the line in the sand for the Nasdaq, so it is still bullish. We did have a sell-off last week, very similar to the SPX, and at the moment I'm just simply viewing this as a correction. Any continued pullback in the Nasdaq is viewed as an opportunity to look for further advances into the next key of resistance, the upside and the target set, the 15236.09. Next is the Nifty. Since I added the Nifty into the forecast, we've been taking out target after target to the upside. It's been a really nice market, and we came very close to the target set last week at 15987.45. I was bullish on the Nifty. So for anybody not involved from last week, I expect this target to be taken out. What I would like to see is, if you're not involved, is really to see a correction first. Any pullback in this area, once again, would be an opportunity to look for bullish reversals into the next key of resistance, the upside and the target set, the 15987.45, and once we break through here, I'm going to be looking up towards target 2 at the 16080.10. Next is gold. Now, last week I was bullish on gold, looking for a move into the 1850.94. The problem with this rising gold, and as we saw the dollar rising last week, we still also saw gold rising to the upside. But with gold rising into a stronger dollar, it's just capping any move to the upside. It's making the rise to the upside in gold harder than it would be if we had the dollar selling off. So with that in mind, how I would like to trade gold next week is the same as pound dollar and US dollar yen. Those would be my three backup currencies, my reversal currencies. If the dollar reverses and we get that head and shoulders reversal we talked about earlier on, which we don't have yet, but if it does materialize, then gold to the upside, US dollar yen to the downside, pound dollar to the upside would be the three markets that I would look to pivot to take advantage of that reversal. So any pullback in this market, if we do get a reversal in the DXY, would be viewed as an opportunity to look for bullish breakouts. And as we broke down here, what you would likely see is this in gold. And I would be looking up towards the next key resistance, the upside and the target set at the 1850.94. Next is silver. Now, unlike gold, which we just looked at, silver is structured to the downside. We had this correction and then somewhat of a head and shoulders, which is confirmed below this level. We also have really nice momentum to the downside. So lower lows are likely to follow in this market. So any pullback in this market going into next week would be viewed as a great opportunity to start to look for bearish reversals down to the next key of support to the downside and the target set at 25.38. So primarily I would look for short positions in silver, and only if we got that reversal in the DXY would I pivot to gold and start to look for those moves to the upside. And last but not least, we have Bitcoin. Now, for those of you who follow me on Twitter, I did call the big reversal to the downside on my Twitter feed in Bitcoin, and I have been bearish on Bitcoin ever since. We have been very choppy in this market, but we are grinding to the downside. So very simply put, going into next week, any pullback in this market is simply, as it stands, viewed as an opportunity to look for bearish setups down towards the next key of support to the downside and the target set at the 30.214. I do think we're going to struggle to bottom in Bitcoin and reverse higher unless or until we start to see that reversal lower in the DXY. So that is it for me for this week, guys. The overriding theme going into next week being those commodity currencies weakening and softening, and especially paired against the risk-off assets, the safe haven assets like the Swiss franc, the Japanese yen and the dollar. They're looking like some of the best setups going into next week. So I hope you enjoyed the video, and if you did, please let me know by liking, sharing and subscribing. Big thank you to everybody who does that on a regular basis, and a big thank you to everybody who has subscribed to the channel so far, and also everybody who likes, comments and shares this content on a regular basis as well. So I want to wish you all a fantastic weekend, and I want to wish you all the best in your trading next week. The only thing left to say is take care and don't forget to trade safely.